Good morning, traders, and welcome to the Daily Call today, Friday, the 30th of November. Before we get started, as always, please understand that any advice in today's session is of a general nature only and that your personal circumstances have not been taken into consideration. Okay, let's have a look at what's happened yesterday from the US. We had the FOMC meeting minutes, and they revealed a couple of the highlights was that some members, whilst viewing that gradual rate increases are likely to be appropriate, they did express uncertainty about the timing, and a few believe that the current rates are very close to their neutral levels. Regarding a December rate increase, almost all agreed that an increase would be warranted fairly soon, provided that the labour market and inflation data was in line or stronger than the current expectations. So it's pretty much standard, a slight dovishness to those minutes and a bit of a change of a mood, but not too much surprises there. US dollar yesterday not reacting too much to this information as we had a fairly tight trading day. Locally, we got the private capital expenditure quarter percentages. That came in at minus 0.5%. That was under the forecast of 1.1%. Aussie dollar did have a very tight trading day as well. I think we only traded around about 40 odd pips, and it did get a little bit of a boost from those minutes a short while ago, but pretty much not much movement. Alright, time to have a look at our chart of the day. Incidentally, that US yen chart that we were tracking pretty much all week did drop down. Unfortunately, it didn't give us a clear signal to enter, so of course I won't take the trade just because we're at the level. So we got no trade out of that one, unfortunately. So let's have a look what I got for us this morning. It is the Kiwi US dollar on a daily timescale. Now, a little bit interesting this one. We could possibly think that we are in an uptrend situation here. Our moving averages have crossed over. We're breaking highs, lows, higher highs, and we are at the equal level of the current high. Now, the type of trade that I'm going to try attempt over here, if it continues to go up, well then basically what's going to happen is I don't get triggered at all, so I'm not really worried about it. But I noticed at this particular level where we are right now, the market did act supportive before. Then when it broke through, it acted in resistance once, twice, three times. We are there right now. It's not your classic double top, but it is a key level, and we have just produced an inside candle. So what I'm interested in is when the new candle, which starts in about half an hour, and it'll be over here somewhere where I've got my cursor, when this new candle begins, I'm happy to put in a pending sell stop order at the break of the inside candle. If it does fall and break and trigger me in, well then I'm happy to take that trade. If it breaks the high side, well then obviously I need to cancel out my sell stop, and then my trade will not be set up, and basically we move on and we look for something else. So there you have it. This is today's chart of the day, Kiwi US dollar on a daily. It is set for the pending order. Let's see if the market does come down and trigger us into this trade. Okay, what's happening in the final session for the week? We have ongoing throughout the day today. It's the G20 meeting summit, so that's happening throughout the whole day. At just after midnight from Canada, we have the GDP numbers due, and then tomorrow for Saturday we have also the G20 meetings continuing. So that pretty much wraps up for the weekend for us, guys. As always, please feel free to contact us if you do have any questions. Follow me on Twitter at ChatFX for trade setups and breaking news. Most importantly, hope you all have a fantastic trading day. Have a great weekend. I'll talk to you on Monday for the Daily Call. Bye for now.